I mean, a very strong start to the March series. Just yesterday, most of us were talking about, it's perhaps time to be cautious. But clearly, the impulse should have been to buy on dips now, isn't it? Because that strategy has worked out beautifully over the past few weeks.
Hi, Suyash. First of a very good morning to you and to all the viewers. And how I mean, that strategy has been working so beautifully. But let me also add one thing here. I think a couple of things that have got missed perhaps in translation. Uh, for a while now, Nifty's had those 200, 300 point kind of moves across the month, maybe even lesser. Back in that time, the volatility was perhaps 11, 12, 13 at best, and that's the kind of volatility India VIX number that we were seeing. Off late, the VIX has spiked up to 15, 16 kind of levels. What's happened is that the range on the Nifty has now expanded from about 2 to 300 points to about 5 to 700 points, and that's the kind of move that we are seeing. Uh, because a lot of us are not used to that kind of a big move, at least on the downside on the market. uh, every big dip seems like the supports are taken out, and perhaps we could head lower, but the market continues to surprise us on the positive side, and a bounce emerges. So what I'm saying here is that the range is expanding, the volatility is going higher, but the buy on dip strategy is very much intact. The markets are on an upward trajectory. The recent highs have only been incremental, but I think once once we take out the 2250, 20 to 300 kind of zones, I think 20 to 500 is a very convincing target on the near term, and we've maintained that for a while. So buy and dips will continue, as a strategy, and with the expanded wicks, traders and investors will perhaps just have to learn to live with the higher volatility and the expanded range.
All right. And what's your view on Nifty Bank? I mean, clearly, at least this morning, it's leading the charts. It's up about 1% or so, and we have almost seen a V-shaped recovery. We lost about 800 points in a matter of two sessions. We have recovered all of that back very close to 46,600 levels as we speak, Kush. But I mean, is this recovery sustainable here? Because we have been talking about it weeks on weeks, but Nifty Bank really, is not able to sustainably move upwards.
And yeah, I think the key word there is sustainably, right? I mean, we saw a stupendous run where the Nifty, from about 45,000 levels ran up all the way to about 47,300, right? So a good 2,300 points kind of an up move. Uh, and then it again gave away some way, right? I think here the move is not as convincing. How I would play Bank Nifty is live by the day. Go by the day. Whatever the trend is for the day, you could perhaps just be a participant in that trend. And if really that's not your strategy or your style, it's best to avoid Bank Nifty. It's not really as convincing an up move yet. Even today, if we see the 50-day moving average, which is close to 46,700, 46,800 kind of zones, that's proving as a resistance. So I think here there is some still pressure left. However, we do maintain that 48,000 is a target that the Bank Nifty could see in the coming weeks, perhaps months also. But the move here is not as convincing. So we'd perhaps be best avoiding it if you can't really handle all this kind of volatility here. So Bank Nifty for sure under pressure, not as convincing as the Nifty up move. So if I have to pick one of the two, Nifty would be my pick.
All right, and we are looking at the sectors on the screen. Most of them are trading in the green, but one particular pocket of the market, is feeling some bit of a pain. In fact, since yesterday, is that's the pharma space, and specifically hospital stocks. I mean, there is a Supreme Court order out there. I think they are planning to, put a cap on certain charges. I mean, Amit over here, please tell us all about it.
Not a cap as yet. There was a law that is a rule that was framed 12 years ago, and the Supreme Court has criticized the central government for its failure to enforce that law, in which the range of rates needs to be specified. There was a public interest litigation that was filed by the NGO Veterans Forum for Transparency in Public Life, where it found out that government hospitals and private hospitals had a huge disparity in the range of rates. Now, after this criticism by the Supreme Court, market capitalization of hospital stocks went down by 16,000 crores yesterday. And I'll just take you through the stocks that lost, how much they lost. Apollo Hospitals just yesterday lost 3.84%, Fortis 3.44%, Global Health 4.34%. Max Healthcare as much as 7.46%. Artemis Services 2.05. Rainbow Children's 5.47. The list is long. I mean, I've just taken the prominent ones. And if we look in contrast of what the gains these very companies have given in the last 1 year, just look at that. Global Health gained 175% almost last year. Astra DM Healthcare 114.88%. Artemis Medical Services 163.59%. Apollo Hospital, even that 39.02%. So in just 1 day, a huge amount of loss happened in this sector.
And Amit, that continues even today. I mean, yesterday investors lost nearly 16,000 crores because of this correction that we saw in the hospital stocks. The pain continues as of this morning. Stocks
Across
are down.
the board, some have gained a little, but most of them are still down. I mean, Max is still down by 8% almost.
Max is down by about 8%. Your other hospitals like Apollo, it's down by about 2.5% or so. Kush, what's going on here? I mean, is this sort of a correction even justified?
Or is it just a blip because of the Supreme Court thing? If something has not changed in the last 12 years, do you think this downturn is going to last, or it's just a blip?
So traditionally, if you see historically, rather what you've seen is that these kind of announcements have turned out to be buying opportunities because after some course correction, it's business as usual. So for me, this will be a buying opportunity. The only thing here is that I'll wait for the fall to settle. Now, the stock that I have on my radar, Rainbow Children's, Medicare is the first one that we've been, suggesting for a while now. Had gone into a bit of a consolidation mode, and it's again back to that consolidation level after the spike. So for me, that's one stock that will be on my radar. I'll look to buy Apollo Hospitals too. But since the move here was exaggerated, the fall too is commensurate here. So Rainbow Children's and Apollo Hospitals, these are the two stocks that I look for as a buying opportunity at these levels. As I said, just waiting for the dip to settle, and then perhaps these could be a good short-term trading bets also.
All right.
Yeah. So what do you make of Max? That is the one that has lost the most in the last in yesterday's downturn, and it had risen almost 85% in the last 1 year. Do you think it's a buying opportunity even for Max?
I mean, 8% yesterday,
Yes.
8% today.
Today, yeah.
Kush.
Well, it could very well turn out to be a buying opportunity. It's just that, as you said, the stock had actually risen quite sharply in the last couple of months also, in fact. But here the fall is so sharp that, it's not even seeing any kind of an arrest. The couple of stocks that I mentioned, at least Rainbow, if you see, it has, respected some of its key averages, some of its key support zones. Max really hasn't. And the volumes that you're seeing on this one on the downside are quite heavy. So for me, this could be in, for a bit more pain. Although the stock has recovered from the 706 kind of lows of the day, but here perhaps the fall could probably be a little more, or it could go into a bit of a sideways consolidation mode and then rebound. So Max, I would wait and watch. I would see the kind of moves that the stock is playing out, and I would still suggest that Rainbow and Apollo it would still rank over Max to me. Given the trading setup that I'm seeing on the chart right now.
But Kush, I mean, is there a valuation concern over here? Because I'm looking at the PE of some of these stocks. They are trading at a multiple of 75, 80. And for, just to put in context for our viewers, Nvidia is trading at a PE of 65. I mean, is there a valuation concern?
So, I'm no expert at fundamental analysis, but the one thing that I've been hearing from my fundamental peers is that the valuations are stretched and everything's looking expensive, but the fact of the matter is that everything's still going up, right? So I think we'll have to learn with high P's as the new normal. So for me, of course, that does remain a concern, but it's not really a stopper, at least from a near to a medium term perspective.
Okay, that's so much about hospitals and the blip there. But what are your picks for the investors today?
A couple of them. From a medium-term perspective, we've got Concor and HFCL that we've highlighted to our clients also as a part of our advisory service. Both the stocks have seen a fair bit of knocking, but the rebound on them has been encouraging. Both of the stocks have actually, in fact, rebounded from their 20-day moving average. So Concor with a target of 995 and 1010, stop loss here would be 955. HFCL, this stock too, very similar pattern as I said, rebounding from its 20-day moving average. 111 and 114 are the targets, and 105 is where I would place my stop loss.